leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the Kunming Montreal Global Biodiversity Framework. Our goals: knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the Kunming Montreal Global Biodiversity Framework. Our goals: knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the Kunming-Montreal Global Biodiversity Framework. Our goals? Knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the Kunming-Montreal Global Biodiversity Framework. Our goals? knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the Kunming Montreal.
Ladies and gentlemen, welcome to the event Building Together, an inclusive dialogue on insurance and loss and damage, here at the IDFC Pavilion. This year at COP, the expectations are high toward the outcomes of the Glasgow Sharm el-Sheikh Work Programme and negotiations on pledges to the Loss and Damage Fund. In view of many crises, it is becoming increasingly difficult for donor countries to secure funds in the long term, while the developing countries expect a significant increase in money transfer in the future. Our objective today is to explore possibilities that insurance and risk transfer mechanism offer in mitigating and addressing loss and damage. We are embarking on a comprehensive exploration of opportunities and limitations inherent to insurance, its value for the Loss and Damage Fund. Moreover, we'll take a closer look at the potential roles of insurance within the evolving landscape of funding arrangements, set to be further refined at COP28, including the Global Shield Against Climate Risk, a joint initiative between G7 and V20, to assist countries that are particularly affected by climate change. In today's event, we bring key experts of pre-arranged finance and climate finance arrangements around L&D to discuss the role of insurance to manage loss and damage. Joining us today, we have the co-director of the Global Shield. I welcome Dr. Astrid Zwick to the panel. I would also like to warmly welcome Dr. Annette Detken, the head of Insure Resilience Solution Fund and the head of the Global Shield Solution Platform. I would like to welcome and including the perspective and voices of Global South and most vulnerable, Sarah Jane Ahmed, the financial advisor to the V20, and also our colleague from an expert on climate change adaptation, Dr. Catherine Simonet from the French Development Agency, the AFD. We also have another colleague that is stuck in the queue, which is joining very soon, Professor Svenja Sominski, who, among many roles she has, is the chair of the Munich Climate Insurance Initiative, MCII. To guide the discussion today, we have structured this panel in 3 temporal dimensions: past, present, and future. For the past, we will be evaluating past experiences, delve into how insurance has been used to address loss and damage, drawing insights from key figures in the field. Present, we will discuss current development and how they shed light on new solutions that are developed to address loss and damage. And future, so we will look into how and where the insurance industry is moving forward and how that will meaningfully support loss and damage related needs. After our panelists have presented then examples and experiences, we will invite everyone in the room to participate in the discussion in a form of a brainstorming and Q&A, but I will come back to that later. We'll use Mentimeter for that. Without further ado, I think then we will start with the past, how insurance has been used to address loss and damage. And I would like to give Astrid, you, please, if you would start and tell us, since 2016, the Insure Resilience Global Partnership has worked on substantially scaling up the use of climate and disaster risk finance and insurance solutions, CDRFI solutions. And now that the IGP is transitioning into the Global Shield, could you underscore some experiences and also knowledge that will be brought in?
Thank you very much. And good morning, everybody. I'm happy to share some of the experiences we've had and some of the facts we gathered and under the Insure Resilience Global Partnership, which is basically a foundation for the Global Shield. But I come to that as well in a minute. With the Insure Resilience Global Partnership, we have also set out a Vision 2025, which set an ambitious target that we want to provide protection for at least 500 million poor and vulnerable people in the vulnerable countries. By the end of 2022, we I would say respectively the programs that were gathering underneath Insure Resilience Global Partnership, that were about 29 programs with 475 projects in more than 120 countries, that reached 190 million beneficiaries worldwide. Sounds like a big number, and it's already quite an achievement. But to be honest, if you look at the numbers that we have heard over the last days in the debate, also especially with loss and damage, you say that it is a drop in the ocean, right? Nevertheless, we can learn from what we have started here, and then also I'm coming to the Global Shield, what this can do. But let me explain a little bit what impact we have encountered. So with the Injury Resilience Global Partnership, there are different approaches. You could provide protection cover to governments, communities, but also the individual, macro, meso, and micro level. And in general, the programs help really to inject fresh and fast liquidity after crisis has hit. So our, for example, regional risk pools are able to pay out within a few weeks only after a hurricane, a windstorm has hit, let's say, small island states, etc. I take an example. ARC, the African Risk Capacity, for example, since 2014 has signed 62 policies that were signed by the member states for cumulative insurance coverage and of about $720 million for the protection of 72 million vulnerable population in the participating countries. So money is paid after crisis hits, running through contingency plans, triggered through contingency plans, is paid to farmers so that they can purchase new seeds, they can purchase food, they can continue their living. An example, more in concrete, from 2019, Senegal has received 23 million from the African Risk Capacity Insurance Limited to assist in providing early action to support more than 975,000 people affected by drought during the agricultural season. So that's quite an example, and I think we can learn a lot about here. But we cannot continue with this business as usual. I mean, that everybody looks and provides solutions on a single, in an individual way. We need to better coordinate action. We need to collaborate to be really able to scale up here. And that's what probably paves the way to further discussions here on the panel, but it also paves the way towards the Global Shield. That's really a big collaborative effort here. And I stop here because we'll delve into that a little later. Thank you.
Thank you very much, Astrid. Yeah, then exactly. So we talk a bit now about the past, and you were talking about synergies, partners, but I think I'd like to ask you, Annette, about ownership. So, based on the experience ISF has in working with local partners from the private, the public and sector, but also NGOs, what experience can you share where the leadership of these local actors has been leveraged to develop and adopt insurance solutions for loss and damage? And I would ask if you could keep these two minutes, would be perfect. Sorry, my apologies, I didn't say this before.
Yeah, thank you very much, Maxime. Keep it very brief, but maybe just 2 words on ISF, because the Insurance Resilience Solutions Fund that I'm heading was set up in 2019. And is funded by KfW on behalf of the German government, and has a strong focus on supporting climate risk insurance products for vulnerable people. So currently we have 29 projects globally in developing countries where we support the development of needs-based products. Now, it's important to know that we have certain eligibility criteria, and one very important one is that we always ask and require partnerships to submit their requests. That is, we want to have a representative from the supply side to make sure that, so these are insurance companies, brokers, fintechs that are able actually to support and have the technical expertise to develop these kind of climate risk insurance products. But also, and that is the second part, is actually on the demand side, because we need to make sure that whatever is developed is based then on the needs and addresses the local context. So we always ask a local partner to be part of the partnership, and therefore in all of our projects that's by definition the case. And we're currently, I mentioned, developing products in more than 20 countries. And here this can be products that address the needs of an individual. So what we call micro approaches, where the insurance covers an individual. We have covers that actually cover then an aggregator, which could be an MFI, could also be a cooperative, but also on the national level. And in each case, we see actually these leaderships. Maybe just to add, what are the driving factors? So I think there are 3 points that I want to stress. First of all is awareness and understanding risk. And here climate risk analysis comes in. I mean, we share here a common passion, Maxime, right? I think this is the basis to make an informed decision and really know what is the current risk, but eventually also what comes up, in the next decades. Second is an understanding of insurance. So, and also the limits of insurance, right? We cannot say that insurance is the panacea, but of course it's a mechanism, as Astrid mentioned, where we can learn a lot for the future. I want to be short, and we can delve into this later. And the third aspect is actually affordability, and also this we will discuss later. So I stop here for the sake of time, but just stop.
Yeah. Thank you very much for these insights, Annette. And then I'd like now to ask you, Sarah, for some welcome. So ask you some maybe some key lessons from the V20 since 2015. It has facilitated cooperation among the most vulnerable countries tackling the impacts of climate change. And then, can you give us very shortly key lessons that have been learned in terms of the role of insurance to address loss and damage?
Thank you. Thanks, Maxime, for the question. Just to introduce the V20, it's a group of finance ministers representing now 68 countries and 1.74 billion people. So in terms of key learnings, I mean, the countries are at various stages of insurance development, and this is also due to how they've developed their capital markets and affordability, of course. In terms of lessons learned, I think it's clear that there is a role for this product to play, but that coming from Insurresilience, which was a V20 and G20 initiative some time ago now, but not too long ago, the message there was we can't have one product at a time, and timing matters, and how the products interact matter too. And so from that lesson learned on, okay, we can't just have one product and then work on something else to try to complement it, but rather could we find a way where countries can get access to a portfolio of tools so that they can better risk manage. At the end of the day, the world is getting riskier, and players have to add risk financing, liquidity, protection options. Adaptation is clearly something that we learn is, well, we know it's lacking, and it's a clear complement to insurance. I think those are the key messages I'd like to highlight.
Yeah, thank you very much. It's very clear. And I'd like now to ask you, Catherine, on, from your experience with the French Development Agency, then what lessons from adaptation finance, including insurance solutions, can you inform effective loss and damage finance?
Yeah, thank you. So AFD's climate finance represents 50% of our portfolio, and adaptation only, but we expect more, 30% of our adaptation finance. This adaptation finance has grown quite fastly since 2015. In 2015, our adaptation finance represents 500 million, and now 2.2 billion in 2022, so it's a multiplication by almost 4, and we expect this multiplication and this growing is also growing with a continuous improvement of the quality of this investment and our impact. CDRFI have always been part of the solution we provide and we consider in adaptation finance. We have a long-term experience in supporting ARC mechanisms that you mentioned, and we are very keen to continue to supporting CDRFI finance, especially because we foresee this kind of project being part of the loss and damage solutions. We do think that public development banks in general are important solutions providers on the loss and damage agenda. And we also noticed that we have a lot to learn, especially French Development Agency has a lot to learn on CDRFI mechanisms because it's a growing topic for us, and we have some expertise, but that's also why France has announced yesterday to renew our engagement to the Global Shield Solution platform, to the Global Shield through the Global Shield Solution platform of 20 million euros for next year, because we believe that we need more coordination, and also we expect from this engagement to learn from past experience like Insure Resilience. From adaptation finance, I would say we have developed an evaluation about our last 10 years of investment on adaptation finance, and there is some evidences that I think are still validated for the topic of today and for the loss and damage agenda. The first one is the importance of the local context, the importance of taking care of local context for improving access, acceptability, and uptake. The second one is the importance to working across scales and having a systemic approach. And I do believe that we are in the good way of doing that also with the Global Shield. And the last one is about data and research. There is a huge importance to link data and research to our investment in order to have this cross-learning, and learning loop. So I will stop here because.
Thank you very much. Data and research, you speaks to my heart. And it gives me the perfect bridge to you, Svenja, for, because you have a lot of different roles, but it's exactly where my question goes. So from your experience from academia, so research, but also governance and private sector, what enabling factor would you see as essential for an effective use of insurance in loss and damage? And we were talking about data. What role plays data and analytics to enable these factors?
Okay, well, first of all, big apology for walking in late here. I'm very happy to be here, though, and I was meeting with a minister, and usually ministers don't have much time. This minister had a lot of time, so I had to cut him short and basically run over here. So, look, it's great that we're having this discussion. I mean, I've been working on this topic for a long, long time, and as you said, in different roles, and I'm trying to bridge also this gap between, the research side, the practical side, the policy side through my different roles. And I mean, I think, first of all, it's fascinating that here at COP we actually see, insurance being discussed as if it was always part of the solution mix. So I think we have come quite a long way. But, and this is kind of my big but, I think in this context, and particularly in the context of loss and damage, we need to be also very clear about where the limitations are and what the role of insurance can actually be together in partnership with a lot of other efforts. So, the worst thing would be for people to see insurance as the solution to loss and damage or the solution to adaptation. So in my role at the as the chair of the Munich Climate Insurance Initiative, we've been working on this for more than 15 years and very closely with many of you here on this panel. And I think the key thing to actually use insurance in an effective way is, you shouldn't start with insurance, you should start with an understanding of what the underlying risk drivers are, what the issues are, and what is already being done about the risk. because, you know, we have by now, at least in many places, adaptation action starting to take place. So what we really need to do is understand that much better and integrate that also into our tools and models. And at MCII, we're working, I think, in a couple of countries. I think it's also in Thailand and Egypt, to enhance our understanding of risk. So that really needs to be at the starting point. And then I think it needs to be driven by local needs. What are the local needs? And a lot of the solutions, you know, when we started this journey, there was this hope that we would have like something that sits readily on the shelf and we could just apply that across the board. I think this is really difficult with insurance, and there have been also some misunderstandings of what insurance is and what it isn't. So again, you know, what are the local needs? You know, who are we trying to support and make then this as, you know, as sort of appropriate as possible. But also be, as I said at the beginning, be clear about the limitations. So I think, you know, it's exciting, and I think we're all on the right journey, but let's make sure that we also build our knowledge on, you know, on some of the failures in the past where actually insurance has, you know, has been tried and maybe was not successful. And I think that's where academia can also bring some insights. So yeah, just as a starting point, I'm looking forward to more discussions.
Many thanks. So we had like an overview of past endeavors around loss and damage and insurance. And then now in this session, we would like to look into what about the present. And then I would give you, Astrid, maybe ask you one question. So we talked a lot about Global Shield. It's been launched last year. And can you tell us how is it different from other initiatives? And I think you might have some slides. If you want to use them, you are welcome. And Annette, you said maybe you want to jump in as well, and then very welcome.
Yeah, maybe I'll give a quick overview. I mean, to make it a little bit more tangible, usually you have a lot of actors in the area of climate and disaster risk finance and insurance. And I mean, over the past 5 years, they really have mushroomed now, I have to say. And everybody is approaching different ministries, different representatives of the ministries with different single solutions. And what we want to change is, and Annette has said it really nicely as well, looking at the demand side and putting the country into the driver's seat, into the leadership, and the country should really pose the request, what it needs, but based on a distinguished and quite a good process that we support, with which we support the country here to look at the risks, and exactly that was mentioned. You have to understand the risks first, to look at what's existing already, and also to develop a gap analysis. So it's a collaborative process. It's an inclusive process because local stakeholders, local experts are included. Especially also those that are, for example, from the local markets, for private sector, the regulator for the enabling environment, but also civil society organizations. And the invitation comes from, in an ideal case, a Ministry of Finance, for example, which owns the process. And the whole effort is done that we convene the actors at a local as well as a global scale to support a country more holistically with a more strategic approach. And I can show something like what it looks like. This is what I was talking about. We run through a process. It's a new process, and we are currently learning. And we had started with Ghana, one of our pathfinding countries, to look at what exists already in the country, to conduct a gap analysis, and also now Ghana was able to pose the request on what it really needs, and it's a suite of a lot of solutions that Ghana needs, and we will hand this over to the new finance vehicles that really, in a very specific, on a more granular level, dig deeper into what type of solutions there should be. And I stop here because Annette can much better explain how it looks like. But I think I have another slide. This is the this is not the one I wanted to show. Nevertheless, I think I stop here and would hand over to Annette explaining maybe the next step, or when it is handed over to the finance vehicles.
Yeah, thank you very much, Astrid. I think I can be really short because you have explained very well already. So I'm a big fan of the Global Shield. Why? I'm heading the Global Shield Solutions platform, but based on my experience in the Insurance Solutions Fund, where I mentioned that we have many proposals. We have seen almost 400 proposals for requests to support product development. And what we do in each case is we actually look at what is already there, right? So what kind of products, what kind of initiatives exist in the country? And it's quite a cumbersome exercise. And very often we stumble upon these pilots that have started, but then because of unsustained support, they were just neglected, and then people start all over again, right? And it's really a frustrating experience for the countries themselves, for the partners on the ground, to see that there is not the sustained support. Second, that it's isolated, right? It's very often unsystematic. And Svenja, you have mentioned it as well, right? It's very important. It's embedded in the national policies, that it is complemented with risk reduction and adaptation projects. Now, this is something that with this process that is now set up in the countries should actually be better prepared, right? So, and then also that not all donors jump in and do different things, but that it's coordinated, and therefore also the different vehicles, financing vehicles that will support in the countries, they are coordinated via the coordination hub. It's the name of the program, right, more or less. In its DNA is really this closer cooperation. I think this is the key point, and that's the reason why I'm such a big fan of it. Thanks.
Thank you very much. And I think it's important also when we are talking about initiatives like the Global Shield to see also what are the limitations of insurance solutions in vulnerable countries. And then I would ask you, Svenja, maybe to tell us what is when we're talking about reduced insurability in certain regions, so what are the limitations of insurance solutions regarding loss and damage, and how much should it be a concern for initiatives such as the Global Shield?
Yeah, thank you. I mean, I think this comes down to really understanding what is the problem that we're trying to address. So if you take, a certain region or a certain area, and you look at loss and damage, and you need to understand, who's ought to benefit and with what purpose. So I think that, sometimes we just straight away jump into this and say, oh yeah, we need some funding for loss and damage, and off you go, and let's find a solution. I think often we are even not clear about what it is we're trying to do. And I have also seen, I know this might be controversial, but some relabeling. What used to be just adaptation is now loss and damage. So I think there is still a degree of lack of clarity. So I think that's the first thing. And then, obviously with loss and damage, it's very broad because there are non-economic aspects. I mean, there's loss and damage in terms of the natural environment. There's loss and damage also of cultural heritage. I mean, there's a long list of things that do not usually sit in nicely with, the application of insurance instruments. Plus, with insurance, you know, in its purest sense, it's really there to protect cover in case something bad happens, not because something bad has already happened. And so, you know, we need to understand how we can gear loss insurance solutions so that they can play a role in accessing finance quicker and making sure that people have access to finance when they need it. And also to make sure that loss and damage do not, you know, go completely out of control. I mean, this is the other thing. I mean, obviously it's a reality, but there's also, if we look forward, there's also, you know, the risk of loss and damage increasing. And, you know, unfortunately, in many parts of the world, this will be a reality. So how do we use current tools to do all we can to keep it as low as possible? I mean, these are just some general ideas. But I think then when it comes to using our knowledge and understanding, this is really where I think those who've been working on insurance solutions, those who have been working on adaptation, and those who are now working with local communities or countries on loss and damage can really, you know, need to sit together and compare notes and exchange knowledge about tools and bring those tools together. And I don't think that has happened really that much. I mean, there are projects, and again, MCII is involved in that. And I think this is also a strand that Insure Resilience has been pushing quite hard. But the reality, I think, often, you know, it happens, you know, with one tool, with one data set, with one partner in one location. And I don't think that's very smart. So I think that's probably something where maybe gatherings like this and also all the conversations here at COP can bring us to the next level.
Yeah, thank you. Really think that for loss and damage, then, you know, involvement of the community, but also direct access is a common concern when it comes to loss and damage finance. And I would like to ask you, Catherine, how is the Global Shield or similar initiatives then considering local communities or other sub-levels of governments?
Yeah, thank you. Access of climate finance in general and loss and damage finance to the most vulnerable and local community is still really challenging. We try at the French Development Agency to now engage ourselves on locally led adaptation principles, and in the continuous effort of doing adaptation impact, we are also very keen for loss and damage finance to reach the most vulnerable, which is a challenge when you are a public development bank. I have to say it's something that we are sharing with our IDFC's partners as a challenge. This question of access, awareness and uptake, we really expecting Global Shield to be able to address it, and I foresee two areas where we have a lot of expectation. The first one is through this in-country process, where we, by inviting CSO, civil societies, organizations, and inviting communities, local governments, we expect to be able to develop need-based requests and to be able also to develop need-based and inclusive initiatives. The second point is when implementations of the support package, we do know that this question of awareness, uptake, and adapted product is key for the effectiveness of these mechanisms. And so we have already discussed a lot with the Global Shield Solution Platform of the importance during this support implementation package to integrate this aspect. We are working with Expertise France for being able to have workshop and communities also surveys, analysis in order to improve that. For the moment, it's still a bit theoretical as we just have the Ghana's request, but this is something we have been really keen in discussing on the design and the process of the Global Shield, and I've putting a lot of expectation on this aspect.
Yeah, many thanks. And you were talking about accessibility of funding, and I would like to ask you, Sarah, about that, because we know Global Shield is focused on a group of Pathfinder countries. But what is the vision, let's say, to reach more vulnerable people and also other countries?
Thank you.
I mean, to reach more countries.
More countries, yeah. Thank you. I think what's interesting about the Pathfinder countries is that they're quite diverse in terms of regions, but also income level and risk. And so I think with that, with all the lessons that will come out of the pathfinding countries, there is an interest to expand. And this is also because we know for sure that countries are not buying the optimal level of insurance from their risk pools. And that's due to affordability. And affordability, just to highlight, is due to three things. One is fiscal space, one is uncertainty, that's overpriced, and the other point is lack of adaptation. And so when we look at the Global Shield and its role and expansion to other countries, the partnership or the cooperation element is quite critical, because it means that a lot of these risk carriers or implementation partners will have to try to figure ways to address these risks. Fiscal space, long-term financing perhaps, or debt relief. They can work with bilateral or multilateral governments, institutions to try to make that happen. Uncertainty is overpriced, data analytics, that's where they can come in. Lack of adaptation, they all have investment arms, I'm certain, and they could come in on the adaptation front. The other thing I'd like to highlight as well is when you go down to the community level, it's not that there's nothing there. I think it's just that the way that you would distribute changes. It depends on what their key industry is, whether maybe it's a fisher or a fishing village, and there is a wholesale buyer or a wholesale market, and that is likely the best way to distribute. So there's also digitization that's coming through in many of these countries, where mobile phones can now share with you data on whether to harvest early or harvest later, depending on weather patterns, but it can also send you money in order to replace anything that was lost. So there are options and opportunities. It's just that it's not going to be the same everywhere, and so I think it's tough then for development partners to come in to try to scale anything just because of that local element. But that said, that doesn't mean it's impossible. There are active regional players and national players that can come in then and support going down to those different levels. The other thing just on adaptation and loss and damage, I know it seems very complicated in terms of it's very gray in some instances, and they kind of look like they could be the same thing. It really does depend on context. I recall a colleague from a small island state, the Marshall Islands, said that adaptation investment is actually like their loss and damage investment. So that's complicated, right? That sounds complicated in a sentence, but if you think about what that person was trying to say, is that when they build those seawalls, they're trying to prevent them from sliding in or getting impacted by sea level rise. So I think what's important to do now is, because there is this complication depending on context, is figure expenditure lines. So what is an adaptation expenditure line and what is a loss and damage expenditure line? Because for communities that experience, let's say, flood, adaptation would be livelihood diversification. Loss and damage would be livelihood replacement. But you can't just choose one. You'll need to do both in an increasingly risky world. And then if we think about infrastructure, replacing the bridge, that's the loss and damage. Making sure the bridge doesn't topple over again due to an extreme weather event is adaptation. So you can't build the bridge the same and then not have the adaptation component, or else you're building in that risk again. So the point is, there is a way to do this, and it's not as complicated, and we just need to figure the expenditure lines and learn by doing. So the V20's Loss and Damage Fund has a list of expenditure lines there for loss and damage and adaptation. It's a starting point, and every country will have a way of defining these things. I know, and then from the donor front, where the resources are being mobilized, it's important that monitoring and evaluation is done at the portfolio level. You won't be able to go down to the project level as well, especially for local level. And that is just something that we need to come to terms with, because we're running against the clock. It's 2023. I really hope this World Bank hosted Loss and Damage Fund shows delivery within a year or two, because if we wait 4 years until this is up and running, I think we will be sustaining more and more losses and damages. Like the V20s lost 20% of wealth in the last 2 decades. If we had 20% more in all of our bank accounts, it changes our ability to invest. It changes the affordability of insurance. And so this 20% is something that we need to reduce for the next foreseeable decade. But to do that, we need adaptation. We need the uncertainty not to be overpriced. And we need fiscal space.
Yeah, thank you very much, Sarah. So we've looked into the past, present, and now, and also for the sake of time, I would ask you to give me just one line about the future. So maybe 2 lines. And then I would like to start with you, Svenja. So, you discussed that already, and then I think that's when we look into the future, when we talk about insurance, then we have to think about the risks are becoming higher, and how is the insurance industry preparing to face this coming challenge?
Well,
in 2 lines.
In 2 lines, and then looking into the future. Okay, no pressure here. It's good that you brought up the insurance industry point there, because that is something I wanted to add to this. Capacity building and risk understanding and so on needs to happen everywhere, and dare I say it, also within the insurance industry, and particularly when it comes to understanding loss and damage in the context of most vulnerable countries. The insurance industry is at a very early stage of understanding those issues. And I work for the largest insurance broker in the world, Marsh McLennan. I do a lot of internal capacity building, and I think that is something. Internal capacity building about the needs, the tools, but also the limitations. And I think this is the key point about the future. I mean, unfortunately, the world is not heading in the right direction. And hopefully after COP here, we will have some clearer signals that we are sort of taking a bend and maybe getting, having a better warming outcome than everybody feared. So let's hope that will be an outcome of COP. But what that means is, loss and damage is going to be a reality, and it's going to be an increasing reality. And we need to make sure that the solutions that we're developing are not just seen as quick stopgaps and fixes, because in the past that was also sometimes the issue. You come up with a solution and that works for 2 or 3 years, and people buy into that, and then there's an issue and people lose faith, or it just doesn't work. And I think we all need to keep in mind risks are changing, needs are changing. And let's also create some flexible solutions that can be adjusted and work with that, because I think that is necessary with climate change where we're heading, but also not lose sight that there are already a lot of efforts. And I think what you described, these initiatives, investments and adaptation, I mean, it's not static. So I think that is my hope. So recognizing the challenge, but also recognizing the efforts that are happening, and building smart financial solutions. So, means a lot of work for all of us, but it's good to have that conversation, because I think there are really positive signals coming from different stakeholders on this.
Yeah, thank you. Now I'd like to ask you, Annette, also again, 2 lines. 2 short lines, so we have time for the brainstorming afterwards.
Putting pressure on me here, Maxime.
Exactly, I have to increase the pressure a bit, so that when with new technologies, and then when technology evolves in general, how do you the access to these technologies in low-income countries is somehow limited. So how do you see this evolving? How do you see breaking the walls and bringing climate risk analytics to most vulnerable regions?
Yeah, okay, so if you want me to include that in my 2 lines, I try to be still very short. I think what I mentioned earlier, a key point is in order to have local engagement is understanding of risk. And it's sad to say risk awareness is rising because we're seeing more and more events, right? And so there is a demand to have more knowledge and understanding of risks. And the Global Risk Modeling Alliance that I'm heading together with Nick Moody from the private sector side, we support that in hopefully also a more sustainable way. And here we're in line with the Global Shield, not just coming with a report, but really doing also local capacity development such that these local partners can do the analysis themselves, learn and develop that together with their partners. And here, just as Sarah mentioned, we don't have time to lose, right? It's really a high time that we come up with solutions. And here it's very important that we learn from the experience of the private sector, from the academia, from the public sector, and move together. I just stop here.
Thank you very much. I would jump now to you, Sarah. And then we had this year the Accra Marrakesh agenda. It set 4 key priorities. And number 4 is revolutionize risk management for our climate insecure world economy. So what do you think is the role that insurance can play in this context? And then how does it relate to addressing loss and damage? Very shortly, in 2 sentences. 2 points.
Okay. So risk management in this context is the surveillance of risk, but also the availability of tools. The insurance industry can play both sides. And just to add, my other sentence is the industry needs to look as well beyond just governments and beyond the private sector, international private sector, let's say. It can look at regional domestic players, and it can also look at other institutions such as the IMF that don't have the risk analytics capacity that they have. And so they could be quite the service provider for the IMF as well.
Thank you very much. I think I'd like to address with Catherine last question for the future. So we are living in a world where crises are happening everywhere in the Sahel, in Ukraine, in Middle East, and so on and so forth. And how do you see with probably more crises unraveling, how should insurance and other financial solutions adjust to serve these conflict regions that will be still on the map and still need access to these funds?
Yeah, I think the tragic international context of these years makes really important to address the issue of climate security. Climate security is a topic that we can see also in the negotiation at the moment that is becoming a topic. Yesterday was the day dedicated to peace, and there is a lot of advocacy that has been rose to address the climate finance more directly to fragile context, because if local action is critical, fragile countries are even more the less beneficiaries of this climate finance, and it's difficult to access for these fragile countries and fragile population to access climate finance. We used to have dedicated fund for this kind of countries, and these funds are often not yet sufficiently climate designed. And so I think with loss and damage, we reduce a bit this gap, and the loss and damage agenda will help us to work on the coordination between insurance, for instance, and humanitarian development, and humanitarian development nexus. And I do foresee a lot of opportunities for insurance also to work, and insurance mechanisms, risk pooling, to improve this access of the most fragile population. For instance, with the adaptive social protection, we see a lot of areas for climate finance to reach this fragile population.
Yeah, thank you very much. And I think I'd like to close the future. The part with question to you, Astrid, when the helicopter passed. We are in 2050, so 30 years, almost 2053, and you are looking back at today, so some visioning. So what do you think the results would be that the Global Shield has achieved, and what would be the successes that you would be reporting globally on loss and damage? Very shortly.
Okay, very shortly. This is one generation from now, almost one generation from now. So looking at what Sarah has said, we have 68 countries in the V20 group, and it's more than 1.7 billion people, I suppose. So even, I mean, with the Global Shield having reached out to those people and more, beyond even the V20 group, and having provided them with the capacity, the knowledge, and the solutions to cope with climate impact. And it's, I mean, insurance is magic, but it's not the only part in the suite of solutions. And we've just heard adaptive social protection systems, for example, and others. So that governments understand better what are the most appropriate solutions for the different types of risk they encounter, and that they can cope well.
Many thanks. Thank you very much. I would like to thank all of you on the panel, and I would now give the word to the audience with a very, I think, shorter collective brainstorming using Mentimeter. So we will show on the screen a QR code that you can scan, and there is also a code. You can type in this code when you go to www.menti.com, and you can type in the code. This is 2805 5493. 2805 5493. If you are in the panel and then cannot look back. I will see what I can do with the time. This is a word cloud, so you will type in some words, and then we can have some reactions on that. And then we will have, I think, not time for all questions, but then we will start with the first question when you are all set up. So when you are set up, can you just raise your hand shortly if you are already on the Mentimeter, so I can see where we are? I have 1, 2, 3. Okay, we're not there. Exactly, so you can, okay, so I can see, I cannot read that. 6, thank you. So, once you are there, you will have one question about affordability and accessibility, and basically what strategies can improve the affordability and accessibility of insurance in vulnerable communities, and how can we improve distribution channels and reduce costs. So we can see we have multi-stakeholder participation. There is a character limit, digitization, market buildings, premium subsidies. I cannot read quite this one. It's aggregation. Fiscal space. Yeah, I think we addressed that, but very, very shortly for when it comes to regulations. So we have still waiting if you have more questions on that. Any reactions from the panel on the words? I think you can see the cloud on your mobile. Capacity building, public support, coordination. I think we addressed some of them, but then I really see, maybe on fiscal space we haven't spoke too much about when it comes to regulations. if you can use the microphone if you want to react, and we have also a microphone for the audience if they want, if they also want to react to that.
No, I was just going to say regulation is an important one, and in a lot of these, these countries or communities, insurance regulation is at its early stage, and I think there's a lot of cross-learning that could also be facilitated. I mean, we've discussed that at MCI, how we can also bring regulators together, and I know there are different forums, but I think sometimes it's a little bit like reinventing the wheel, and when it comes to regulation, there's a lot that can be learned from each other, I think.
I think so. I have to choose now. It's a tough decision. Question and answer or another Mentimeter. So I would take the temperature in the audience. If there are some questions, you can raise your hand so I can see. Great. So we have we're going to make a second question, and then I think after that, then I have to close the session because we come at the end. And the second one would be on policy integration. How can insurance and risk transfer be seamlessly integrated into climate policies and frameworks? So we're going to see, as before, a cloud of answers. Your answer. If you do not see this page, then you have to refresh on the app. So the idea is not to, it's one word and then it's not going to be the solution, but it's to trigger some reactions and maybe questions from the panel. Finance ministries. That's yours, Sarah. And we have also capital market strategy. Lessons learned, sharing, so also an integration into the national adaptation plans, risk understanding, we had advocacy. Please, you can take the microphone if you want to add something to that.
Just want to highlight the reason I put finance ministries here is if you're approaching a company on risk, you wouldn't approach their chief sustainability officer. You will approach their chief financial officer or their risk officer. So that's just why we engage the finance ministers in this arena.
No, this is a very good point, and that's, in my opinion, one of the strengths of the V20, that they are at the finance level of finance ministries.
Can I just briefly comment?
Please.
I think one very important aspect that is also important is that there is an understanding of the instrument on the decision makers level, right? So where can insurance and what kind of mechanism, it's not just a product, right? It's a mechanism and it's a solution, and that's why I think the work that the Insurance has actually now provided over the last years is so important. It's not that we say we have all the solutions, but we have experience where this mechanism and in what kind of partnerships it is possible, and then adapt it to whatever need there is.
Last word. I would like to make a link to the loss and damage funding. I mean, the Global Shield is among the funding arrangements of the loss and damage funding landscape, and I think we are currently learning a lot in country with the country work, and I think also embarking on the Global Shield journey helps the countries understand the risks better and pose and basically and set up a list of the demands they have, and that prepares them for anything, also for maybe loss and damage funding, further funding, etc.
Thank you. Catherine, last word?
Yes. I think that the change from a vulnerability approach to a risk approach has been started in the last IPCC report, but time for science to be integrated in policy decisions is taking time, and especially on the climate environment, this topic of risk is still not really uptaken by our partners and even internally. So we have this risk approach being public development banks. We speak with finance ministry that have this question, but mainstreaming climate environment in this question is still really challenging. So I think insurance can really help to bridge these two areas and support this coordination.
Thank you. And maybe, Svenja, you want to have one last closing remark?
Yeah, I mean, I just wanted to say on the Ministry of Finance, there's a coalition of Ministry of Finance, and they've been quite active on the mitigation side. I've been working quite closely with them, always reminding them, and where is the adaptation part in your report? So there is a small element of adaptation in their report, but they're very conscious. So I think that would be a good way to influence them, because that is quite an influential group, and I think they are starting to look into loss and damage and adaptation, and I think this could be a good forum to reach into that.
Well, thank you very much. I would like to thank you, distinguished panelists, for joining us today, and I will be closing the session. We don't have much time for Q&A. I would like also to thank the audience, but also my colleague Alvaro and the team at MCI and UNU for organizing this session. And on that, I would wish you a very successful Finance Day. Yes, can we make a picture of the panelists?
Global Biodiversity Framework. Our goals: knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC, let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility, Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the Kunming-Montreal Global Biodiversity Framework. Our goals? Knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the Kunming-Montreal Global Biodiversity Framework. Our goals? Knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the Kunming-Montreal Global Biodiversity Framework. Our goals? Knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda,